In this video, I'm going to go over one of the most overlooked aspects of trading, but it's one of those that has been around for a very long time and can actually help you understand not only your trades, but the market in general. And hey, stick around until the end, where I've got a special free giveaway that I'm running for this month. But first, I'm Pepper. This is Godly Trading. Thank you for being here. We are here to help traders fulfill the command from Proverbs that says, a good man leaves an inheritance to his children's children. And I firmly believe that there is no greater way to start changing the future financial path of your family, to building that generational wealth, than trading. And trading has become very popular, especially since the pandemic. It kind of seems like a lot of people jumped into trading and learning day trading, and that is all fantastic. And one of the reasons I love trading is because, well, it is very simple. Trading is a skill that can be learned by anybody. Remember the wise wisdom from the famous French philosopher Gusteau in his autobiography, Ratatouille, where he says that anyone can cook. Well, anyone can trade. And these days, a lot of trading is done with algorithms and indicators. But one of the things that we overlook a lot is the actual psychology inside of the trade. I'm talking about candlesticks. Yes, candlesticks. They've been around since the 1600s. They were invented in Japan. And pretty much every chart that I've ever looked at in trading has been a candlestick chart. Now, we're going to jump over the computer right now, and let's dive into the details of this. So if you're not familiar with what Japanese candlesticks are, here's a 30-second brief overview. They're nothing more than a graphic representation of what happened during the course of a day, an hour, whatever the time frame is that you set. I am a swing trader, so I have my charts set at the daily time frame. This is a chart of Apple here, and every single one of these colored bars represents 1 day's worth of trades. And it shows the open, the high price, the low price, and the closing price of that every single day. And because they've been around for a very long time and people have been studying them for a very long time, certain attributes have been ascribed to them, and it's such that if you see certain patterns repeating or emerging within the candlesticks themselves, you think, okay, this is likely to happen or that is likely to happen. And remember, when it comes to trading, we're not dealing in certainties, we're not dealing in guarantees, but we are dealing in probabilities. My particular style of trading has a very high win rate. It's based off of, if this happens, then this is probably going to happen. There's no such thing as, if these two things happen, that will happen. And candlesticks are basically the same thing. So if you see a red candlestick, on my charts at least, you think, well, that's a down day and a green means an up day. Make sure you cut out this part. There are several different candlestick patterns that people use. Look, there are a lot of traders who are very successful trading nothing but candlestick patterns. I do not have candlesticks as part of my trading plan. However, once you learn the psychology behind what goes on inside of a candlestick, it's hard not to see it, and it's hard not to take it into account. So there are a few instances where if I see a particular candle formation happen, even though it's not part of my trading plan, I allow myself to either mentally prepare for what's about to happen, because it's a good prognosticator of saying here's what might happen next, or I allow myself to say, okay, it's time to be flexible and either get out. I don't use candlesticks to get in, but I will, if a certain situation happens, use them as a guide to get out. So I've said before that they are just a graphic representation of what happens. And remember, guys, that during the course of a day, everything that happens, the buying and the selling, that's what trades are, right? If you bought Apple on the August the 24th, then your transaction is hidden within this candlestick. So if we think about what happened here in this uptrend here, all of this is showing me as a technical trader, okay, price went up. And so I think, well, and that means I'm going to do this or I'm going to do that. But I want you to think about the psychology of trading, not trading psychology, right? Trading psychology is one of the keys to being a successful trader. And I have a whole series on that. That's not this. I'm talking about the psychology of trading. So you think about it, people were saying, all right, here's Apple at 200. Well, there's all of these buyers out there who are really motivated. I want in on Apple at 200. And he had some sellers who think, okay, you can have my Apple stock at 200. We're not going to get into market makers. That's a whole nother discussion. But just for the sake of this argument, for every buyer, there is a seller. Otherwise, a transaction doesn't happen. A trade doesn't go off if you don't have a buyer and a seller willing to join together and cause a trade. So we had a whole bunch of people buying here. Well, what happened? Why was it such a giant candle? Because for whatever reason, you had more people saying, ooh, I want Apple at 200. Oh, man, now it's at 201. Well, I still want Apple, so let me get it. Oh, man, now it's at 202. I still want it, so I'm trying to get in. So you have these people who really are motivated to buy because for whatever reason, right? Maybe they have inside knowledge. Maybe their algorithm, their trading plan says get in now. Maybe they're just a retail trader who likes the idea. Maybe they're investors. Doesn't matter why. We don't need to know the why. We just need to know the what. This represents a whole lot of buyers who really wanted to get in and people who were willing to sell at whatever price they were willing to sell at. So this ran up and ran up and ran up and ran up. One of the things I love about the candlesticks in particular is when you see these tails, you can see the battle between the buyers and sellers. The buyers ran this price all the way up to, what is that, 213, and then it sort of fell away. One of the candlestick formations I want to talk about today, the ones that I think are the most impactful, are the shooting star and the hammer. Now, the hammer is also called the hanging man, but for the purposes of YouTube, we're going to call it the hammer. And we see one here on, what is this? This is September the 20th. We also see more or less one here on August the 24th. And so you think about what's happening here. Look at this massive gap. So price came down to here. And don't just look at it as a graphic. Think about what's going on inside that candle. What's going on with the individual person like you and like me who's clicking buttons. You don't have to do this all the time. But it is often very instructional to think about what is going on inside that trade. This is down here at 215, and for whatever reason, there were so many more motivated buyers than there were sellers, and people are willing to just jump in no matter the price. It gapped, and then it gapped again, and then it ran up. And the sellers are like kind of on the sidelines. There aren't that many motivated sellers, so people are grabbing whatever price they can get. Imagine you were going to an Apple store, and they had I'm an Android person, but imagine it's the iPhone, whatever it is, 30, whatever, right? And there's like 10 of them at the store, and you got 50 people in line. Well, they're going to be, you can imagine what they'd be doing, right? They're going to be killing each other. They're going to be outbidding one another. Oh, it's $1,000. I'll give you $5,000 for it. That kind of a thing. That's why price is doing this thing. And it gets up and up, and the sellers are, okay, yeah, you can have my stock, you can have, but because there aren't a lot of sellers, you have some sitting on the sideline thinking, I'm not letting go of my Apple stock for $225, right? I'm going to hang on to it. And then you get to here, and it runs all the way up to, what price is that? 230, 232. Now suddenly, you've got a whole bunch of sellers who've been sitting on the sideline going, aha, now is the time for me to sell my stock. Maybe I was in at 100, and I'm fine. This is my profit target. For whatever reason, they say, this is the moment that I want to cash in on my Apple stock. So the buyers were just like, gimme, 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 gimme. And suddenly you had a massive wave of sellers saying, here you go. I'll give you Apple as much as you want at 230, whatever it is, 232. It's off my chart here. 230, yeah, let's just call it 233. A whole massive amount of sellers came in at 233. And now everyone's getting satisfied. Okay, great, 233, 233. And then you got these people over here who are standing in line to sell. They're like, oh, great, 233, oh, 232, 231. Let me start throwing my stock at people to see if they will buy it. So the buyers ran this thing all the way up to here. And then the sellers were just hyper motivated to get out for whatever reason. And they ran this thing all the way back down past where it opened to here. Now, why is this important? This is not the world's best shooting star. This is a little bit of a better shooting star. Ideally, you want that thing to have more of a body on it, but it doesn't matter. The whole point is what happens, right? Price started here, ran all the way up to here, and then fell back away. Couldn't hold any of it. There were more motivated sellers than buyers. So for me as an algorithmic trader, let's say that I gotten in here and this was my first take profit, and my second take profit was right up here above that, right? I see this candlestick and I'm thinking to myself, you know what? This isn't part of my trade plan. I don't trade off of this, but I've already made my one-to-one. I've got, I've taken my first take profit. I see what's happening here. I am going to head and make, me personally, an adjustment. Maybe I'm going to take half of what I have left off of the table. because typically what happens following this is you have a collapse in the number of buyers. This tells you that sellers are suddenly motivated and they are having a hard time finding motivated buyers to take the stock off their hands. So typically you're going to find price collapse. So what am I saying? Having a trade plan, a rigid checklist, do this trade plan is fantastic. It is the key to being a long-term successful trader. As VP says, trade your plan. Stay the, oh my goodness, out of your own way. Repeat. Absolutely. Trade it robotically. But we are not robots. Emotions are going to come into play. I did a video a while back on how to handle those emotions, and I will link that at the end of this video. The main thing there is don't let your emotions come into play while you're at your keyboard. If you have a big loss, just do what you need to do here. Close down your screen and then go howl at the moon, right? Get those emotions out of your system. When trading an algorithmic plan, a rigid, structural, technical, systematic plan, do your button clicking, do everything your trade plan tells you to do. But at the same time, understand what's going on in the emotions on the other side of the keyboard, right? If you could look through your laptop, your desktop, whatever it is, to the person on the other side of their screen, they have emotions just like you, and they might be reacting emotionally, and you're not. So take that into consideration. You don't have to do an analysis of, okay, well, what's happening with the buyers and sellers? That's baked into learning these patterns, right? The giveaway that I mentioned at the beginning of the video that I'm about to show you here at the end of the video, one of the things that I'm giving away is a wall chart of important candlestick patterns to understand. And now for me, I use them most often, not for any decision-making purposes, but to prepare myself emotionally. And that's really the key. In order to not react emotionally, you have to be prepared for the emotions that are going to happen. So I will start to see a particular pattern forming. Supply and demand is another good one, right? If I don't use supply and demand a lot, but I do use it in certain times to prepare myself. Hey, price is going up, and it's approaching a supply zone. I need to be mentally prepared for this uptrend that I've been riding, that I've been enjoying, to come to an end, or at least pause as it gets there, just to prepare myself mentally. Price is going up, and I see a hammer, a shooting star formation. I need to prepare myself mentally that this could very well, highly probable, that this is going to spell the end of an uptrend. Let's scoot over here to this, right? So we had this bang, bang, bang. I mean, bang and bang, and we're up, and oh, we had this shooting star. Chances are, especially since confluence of this and that together, now this is proving that this price level, 233, 235 here on Apple, there's a lot of motivated sellers still left over that didn't get their stock sold. And every time anybody gets near them, they're jumping all over them. Please take my Apple stock at 235. So just be prepared to yourself. Hey, I really, really wanted to get out at 240. Am I going to be able to get there? Maybe. And if my trade plan says to hang on until you get there, then that's what you do. But don't be surprised if price doesn't get there, because you've had two different candlestick formations tell you, hey, price, this shooting star means we're at the top of an uptrend and we're crashing back down again, coming back down. Sometimes we crash, sometimes we come down gently, sometimes we just pause, right? All it means is this means the thing that you expected to happen, price is not continuing on this very next day. Again, probabilities, not inevitabilities. So think about, from time to time, prepare yourself for the emotions that are inside of these trades and driving these trades. Don't let it drive you. Use it for your own benefit. If we were here and you think, okay, well, price really bounced off that pretty high, maybe this is a good time to go short. I mean, there are lots of people who make a lot of money trading these kinds of things. Something to consider. If you need help at all in putting together a trade plan that takes some of things into consideration, or maybe this is the backbone, reach out to us. Pepper@godlytrading.com. We'll be happy to talk to you anytime. But the point here I want you to understand is we've been talking about the success formula. We've been talking about how to build a trade plan, all of these things. And the key there is rigid discipline, applying proper trade psychology. This is one of those extra tools in your toolbox. You're not going to use it all the time. This is like the star nut or the hex nut in your tool belt. I mean, most of the time it's a Phillips head, sometimes it's a flat head. Very rarely it's a hex nut, but if it's a hex nut, you're going to need it, right? This is one of those things that you keep in your tool belt. And when time comes, you think, okay, I recognize what's happening here. It might be time to make an adjustment. One note, if you are relatively new to this and you haven't taken this into account, but you think you might need to, never adjust your trade plan while you are in a trade. Wait until you are out. Wait until you are flat. If you're a day trader, do it at the end of the day. A swing trader, do it at the end of the week, on the weekend. Some way, somehow, don't let your adjustment to the trade plan affect an open trade, and don't let what's happening in that open trade just encourage you one way or the other into adjusting your trade plan. Wait until there's no emotion going. Just take notes. All right, this thing happened, and I think I might need to adjust my trade plan. It's happened 3, 4, 5 times. Okay, now I need to adjust my trade plan. Happened to me this past month with percent return on it for the course of a month, and I've waited now to the end of the month to implement a brand new adjustment. I think the adjustment can be brand new to my trade plan, but I waited till I was done. Right, and this will be implemented now, and I will trade with it going forward. You think, well, yeah, but if I don't do it, I might trade the same way. But that is okay. All right, you are in this for the long haul. Don't ever forget that. You have a 30 to 40 to 80 to 120, if Elon Musk can put brains in our chips, career ahead of you, career ahead of you. So I mentioned that I had a free giveaway, and here it is. We are running a giveaway every month, and this is our giveaway for the month of October. So what we have here is, like I mentioned before, we've got a wall chart. We've got a one-on-one session with me, and we have my favorite 3 trading books. 4, actually, if you include my book, which I'll have a signed copy of as well. And we're actually inside of the Facebook group going to be going over these books, kind of like book report, what's the word I'm looking for? Book club, talking about why they are so important. Each one has a wonderful nugget inside of it, and we're going to go over the most important parts of those. So the link for this will be down in the description, but it's Godly Trading /giveaway welcome with dashes between those. It's absolutely free to enter, free giveaway. 2 people are going to win this prize package here. 2 members will win this here. Everyone's going to get these things over here. I've got a trading checklist. I've got the podcast. I've got my podcast with the transcripts there and some other items as well. Key element there, though, is in order to find out if you won, you need to join. It's absolutely free. Join our Facebook group. But anyway, step number 1 is just click here to sign up. Put your information in there. It's absolutely free. And like I said, this closes at the end of the month. We've got by the time you watch this video, probably be 30 days left. But we are going to be running these for a while at least. But I would encourage all of you. It's absolutely free. There's no risk to you. There's no money involved here. If you want to join, you want to sign up for this free giveaway. As I mentioned before, guys, please sure to watch this. Be sure to watch it. Be sure to watch this video. Where's the video? Be sure to watch this video on how to handle your trading emotions. My editor thinks he's funny. Be sure to watch this video on how to handle your trading emotions, how to get them out of your system. And with that, guys, I will see you all next time. I'm going to get you.